Hello, hello, hello. What's going on, YouTube land? Welcome to a capital hungry live market analysis on both fundamentals and technicals with the trading pair GBPJPY. We're going to be giving a good higher time frame to intraday review, going through fundamentals, technicals, what events we have in focus, and potential trade ideas from an intraday perspective for the coming sessions where this analysis can potentially be used for the next days or even weeks to come. So, for those of you who've been following along past market update webinars and of course higher time frame webinars on GJ, which are for free on the Capital Hungry YouTube page, you would understand that pretty much ever since the pandemic crash, I have been on a higher time frame bullish bias on GJ. The GBPJPY higher time frame bullish bias evidence is of course historical repetition, very similar price points that were revisited during the pandemic crash as seen during the 2008 global financial crisis, and very similar price repetition as well. Higher time frame bullish structure, which is broken down of course on the quarterly and monthly time frame, where you can watch that webinar for free on this YouTube page if you ever get the time or want to learn more. And one of the most important factors is the macro interest rate differential between obviously a dovish Bank of Japan and a more hawkish Bank of England. But we have to understand something. This macro rate differential is extremely strong as we have Bank of Japan performing one of the loosest monetary policies we've ever seen, keeping interest rates in the negative for the longest period of time we've ever seen, on top of introducing things such as an unlimited bond buying program and still keeping it active and sticking to the same policy to this day, with recent updates we just got on April 9th, with Bank of Japan representatives confirming they're still sticking to the same plan. And due to the excess money printing and pumping into the markets during the pandemic phase, global inflation in major countries from North American countries to European countries, and in this example the UK, inflation being so high has led to the most aggressive rate hike cycles by a lot of major central banks such as the Federal Reserve, Bank of England, Reserve Bank of Australia, and so forth. So there's a massive rate differential between on how dovish the Bank of Japan is and how hawkish the Bank of England is. This is why you can see ever since we had the pandemic crash and we revisited key higher time frame price points that were last seen during the Brexit period and where these lows were revisited, or of course during the 2008 global financial crisis. Since then, we've been in higher time frame bullish structure. Why has bullish structure been validated and held its weight over the last 2 years, almost 2.5 years? Is because of the reason stated with the rate difference between a dovish Bank of Japan and hawkish Bank of England. You can overall see within the course of the last 2 to 3 years, as you get these higher time frame highs printed by buyers, you just have very normal movement in order flow, backtesting the movement on GJ, where you have buyers liquidate positions, sellers jump in hand. This creates and prints what we observe as a pullback on the charts, leading to buyers pooling in from an institutional perspective from more demanded price points of interest, better lower prices before continuing the trend. You can see this formation holding weight to this very current day, as majority of large pullbacks that take place over weeks and months on GJ, regardless of how impulsive it is, comes from new higher highs and failing to print any new higher highs, leading to buyers liquidating positions and having pullback phases. Something else that's very key and important to understand is during this entire timeline, over the course of the last 2.5 to 3 years, we have had intraday fear catalysts come into play on a daily perspective and weekly perspective. During this entire time here of the pandemic lockdown impact on the globe, we were having fundamental catalysts of some countries going back into lockdown or new COVID strains coming out, bringing fear, uncertainty, and doubt. But any of those moves on GJ's macro structure were very short-lived. Or even during the 2021 phase, we were having Russia invading Ukraine, which obviously leads to more short-term market fear, more strength in the Japanese yen. But that short-term strength in the Japanese yen was not enough to outweigh how extremely dovish and loose the monetary policy is by the Bank of Japan. And you can see whether it was new COVID strains or lockdowns happening again, whether it was Russia invading Ukraine, whether it was bad economic and fear within the banking sector, whether it was these recent banking sector fails such as SVB and Credit Suisse, majority of these moves just end up becoming pullbacks, setting up institutional buyers from better price points of interest, getting faded out as we still continue to extend the trend into higher highs. So you can see in recent time here, right at the end of 2022 and into 2023, we had buyers print new consecutive higher highs at 170 price point here on GJ. Conveniently, timing-wise, to set up order flow for the new business year, and of course set up order flow for 2023 that was just opening up, we had this more aggressive pullback phase coming to these exact same demand lows and previous significant higher highs here, still maintaining bullish structure. Even in recent times over the last month and weeks, when we had short-term fear, uncertainty, and doubt come into the market, which was of course banking sector fails, more recessionary scare, economic data, and so forth, even though yen picked up strength short-term, all that led was to this move here, and GJ still just retesting this demand zone roughly at 156 to 157, very key zone, and still canceling out that downside move with buyers coming back into play here in a much more impulsive and aggressive fashion. The information I'm telling you, you have to understand and digest because this gives you a lot of data points to understand. It gives you points to understand and helps you understand the macro perspective that as long as Bank of Japan is as dovish and keeping monetary policy as loose as they are, and as long as the Bank of England is as hawkish as they are and still continuing to focus on the fight on inflation, GJ on a macro perspective is going to remain bullish. Any new fear, uncertainty, and doubt catalysts, they will lead to very aggressive downside waves and pullback phases, like you can see in these areas highlighted here. But 10 out of 10 times, they end up getting faded out as you just have institutional buyers pooling back in from better demanded price points and still overall extending the trend. Right? So what are some key points that we can take away from the events that have taken place, the back testing we've done, reviewing previous capital hungry higher time frame and educational webinars is one, fear, uncertainty, and doubt catalysts, whether it's new COVID strains or lockdowns at the time, and that events get priced in, whether it was Russia invading Ukraine, whether it was banking sector failures and SVB collapsing and Credit Suisse collapsing and so forth, majority of fear, uncertainty, and doubt catalysts are short-lived impact in the timeline essence of macro bullish GJ movement. Does this mean whenever you have fear, uncertainty, and doubt come into the markets that you should be buying GJ during that time? No. It means you should be adapting to a bearish pullback wave and potentially looking for better buys setting up at better higher time frame demanded price points of interest, right? So whether it was new COVID strains, Russia invading Ukraine, banking fails, bad data, all of that fear and strength in the yen is very short-lived impact compared to the bullish structure and macro rate differential between a dovish Bank of Japan and hawkish Bank of England, right? We can also see it's very common for aggressive pullback waves and price wave changes on GJ, but majority of times they end up getting faded out as buyers come back into the market from better price points of interest, and we still continue the trend to be revisiting these higher highs printed and also potentially trending higher, right? So the bullish case for GJ on the higher time frame is very evident. Now, when we're coming down into the intraday time frames and looking at the daily, just looking at the course of events that have taken place over the last month and start of the new year, you can see one, very strong demand zone respected as we had price setups for the new business year of 2023. Buyers entering from better price points of interest. 2, starting to create much stronger daily higher time frame and intraday bullish structure here on top of what we're going to be looking at on the hourly as well. 3, even when we had new events of market fear come into play, which was of course the banking sector fails, and it did lead to some GJ downside and a lot of mess here, all of that was this price movement here. We didn't even go to retest the lows printed from 2023 in this demand zone, and majority of time the candle bodies here ended up closing in line with this very key price sensitivity area at around 161.5 and 162. You can see all of the fear, uncertainty, and doubt here from those catalysts, bad economic data into recessionary scare ranges, SVB collapse, Credit Suisse collapse. It just led to buyers jumping in from better price points. The information's been priced in. We're starting to break out of that corrective pullback structure here and starting to create much more refined bullish intraday structure with potential to still be revisiting and correcting this entire downside move going into the 168s. So the intraday in terms of order flow, we're seeing that we clearly didn't have enough fear, uncertainty, and doubt or fundamental reasoning to be trading below this key demand zone. The fundamental fear, uncertainty, and doubt catalyst that we did have just led to deeper price grabs, and the information got priced in here. A lot of that downside has already been canceled out in more aggressive fashion with very strong bullish price action there. We're starting to break out of that corrective pullback structure and starting to form much stronger hourly and 4-hour bullish structure here as well. Now then, when we're looking at GJ on the 4-hour time frame, you can see as long as we're respecting this intraday bullish structure, and especially if we can be trading above these price points here, the next range we're really looking to be revisiting is into the 168s and 169s, correcting this downside price grab move from setting up order flow in 2023, validating that the macro rate differential is still holding the most weight. And then on an intraday perspective, this is the last price sensitivity area here at 163.5 that's still validating intraday bullish structure. Meaning from this price sensitivity area on the intraday, we've seen more buy side orders collected and buyer volume accumulated, leading to the intraday highs being revisited and new candle body highs being printed as well. Right? Now, we don't really have much going on in terms of economic data for UK overnight or anything of that nature. You do want to keep an eye out for some of the Bank of England speakers that are going to be speaking at IMF meetings and G20 gatherings here throughout the day tomorrow. Otherwise, what's going to be impacting GJ in terms of market sentiment is the important US CPI data through the North American trading session, which is of course going to be impacting risk flows through the New York trading session. Other than that, not much else is going on an intraday perspective, and we still primarily want to be trading what we see and extending the potential buys. Now, I'm liking this stronger bullish market structure forming. This was the last liquidity zone of interest just here, where as long as we're still holding there, we're still very bullish on the intraday timeframes. But if we cannot break back above these intraday highs right away, then I see higher probability of a pullback phase first before continuing more bullish on GJ, which is very, very common when you understand GJ movement, whether you're trending bullish or bearish, right? So if we cannot break above these last significant intraday highs here at 166.2, we break below 166, I can easily see a pullback phase into this last liquidity zone of interest here before seeing buyers enter the market and continuing higher. Otherwise, very safe continuation buys if we just break above 166.2 and just continue the bullish trend on GJ. Right? Now, this is if we don't get any new fear, uncertainty, and doubt coming into the market. If we get any escalations with China invading Taiwan, if we get any further geopolitical tensions coming to the table, if we get any new banking sector fails, obviously don't be looking for GJ buys, as you're going to have a much larger intraday downside move to this demand zone again due to the fundamental catalyst of fear in the short term holding more weight. But in the current time, we don't have any new banking sector fails. We don't have any escalations from the military side with China and Taiwan, or NATO countries and China and Russia. And it's all just noise so far that's not impacting the markets just yet. We still have the macro rate differential holding the most weight, and we still want to look to primarily take advantage of the GJ buys, short-term pullback buys, or just the continuation buys. All right, everybody. So again, just a short and sweet fundamental and technical market analysis going from the weekly time frame, daily, 4-hour into the 1-hour, breaking down key events that are in play, market sentiment, understanding structure, order flow, and some trade ideas there. Make sure you watch the last higher time frame webinar that was shared on YouTube for free for more information on GJ. Other than that, we can still see Japanese yen individually bearish below 76 and still respecting higher time frame bearish structure. GJ a lot stronger bullish price action on the intradays that we want to look to extend. This is going to be saved and uploaded, so you can always rewatch it as you wish. If you enjoy content like this, make sure you like, subscribe, comment in the chat, and comment on the save stream afterwards. Tomorrow at this around same time, I'll be doing a Euro USD breakdown. Gold analysis is still valid as well. I can only see gold buys still above the 2010s. Otherwise, this area is still the higher risk, higher reward sells, and the analysis from yesterday is still active.